All right, good morning. How are you? Welcome to another wonderful day, formerly called Quant Box Live. We are now in our fundamental team in which we review the TRADARS fundamental analytic tool to uncover the best fundamental opportunities across global markets. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. All right, well, a couple of things going on before we just jump right in. You see that we have a 0 on the bias, and looks like most things are neutral. If we jump over the scatter plot today, we might see a couple of interesting things. Well, one of them are metals and energy are way up. Any particular reason why this might happen? Oh, well, China, the People's Bank of China, last night, while you were sleeping, initiated quite a few different stimulus packages, strategies. We'll say strategies. Things like lowering interest rates on mortgages, lowering the RRR. What? Okay, that's the reserve requirement ratio. And if the government requires banks to hold less money at the central bank, then there's more money to put into the economy. So that's stimulative, and then of course interest rates are various things like the 7-day repo, things that impact mortgages directly. But anyways, so there was 3, maybe even 4 announcements last night, and that is all directly to stimulate the Chinese economy, which would increase demand for things like natural resources. Okay. So, yeah, when you look at some of these other things, like if you look at the indices, okay, Europe seems to, and Asia seems to have favored this news. So it's good, is all I'm saying. It's good. We haven't quite seen it trickle into the US markets, but most likely it will. Most likely today will be an update because of this. So, bear that in mind. And you're supposed to say, right, Frog? You ever watch the Muppets? No, you never watch. Jim never watched the Muppets? Anyways, there's Fuzzy the Bear and Kermit the Frog. They're driving somewhere. And one of the funniest jokes ever in any movie is Kermit the Frog is reading the map and the bear is driving. And the frog says, bear left. And the bear says, right, Frog. It's clever. Bear left, right, Frog. Anyways. All right. So yeah. So I would go in today looking. Right? Before after your time, really? What did you build the ark? Yeah. Yeah, you were working on muscle cars and puppets were not. Yeah. Yeah, more right. Yeah. Yeah. All right. So yeah, I would go in today thinking that we will probably get some risk on. We don't have it now. Obviously, it's pretty early in the morning. But some of the best time of the day is upon us and should offer, I would think, some opportunity. Like that's such a good good news that I would think people would want to, maybe quite literally carry it. Like maybe the yen weakens today, maybe the dollar weakens today. Aussie dollar isn't strong, but you would think it would become strong. You would think oil and gold would go up, and they have, and maybe it's directly related to that or indirectly related or will be later. But it's still the hypotheses that you want to use as your filter as you go through your charts, right? Just out of curiosity, let's see what is the best thing to be looking at on a Tuesday. Let's get rid of some of these stocks or all of the stocks. And see, right now, isn't this interesting? Everything is medium quality opportunity. We know in a couple of hours, everything will be high volatility. Yeah, it's interesting how it changes, right? So you should be looking at these markets um, and anticipating this move. So you start with, what do you think today is going to be? So we call that bias. And then what do you think would move? Like oil, for example, makes sense if there's global expansion. If there's expansion of one of the largest economies in the world, they might need energy, right? Okay, so maybe oil. So what would oil do in the next few hours? I would think about, Chinese stimulus should you would think benefit Aussie. When the world gets wind when more and more of the investment world gets wind of these changes, maybe commodities like gold go up, maybe currencies like yen go down. So you start threading this narrative, like, should you be trading oil? And right now, like everything, the best is only mediocre. But we do see that the best part of the trading day is just ahead. On Tuesdays, this is the best time of day. We're just starting. Okay. Now, I've taught people that are trading oil and gold, this is the time to be trading oil and gold. Not be, you might look at this and say this is a bad time. No, no, but we're front running the good time. Now we can actually see it with the implied volatility, which is interesting. There is, it got quite low, and now we're popped back into the implied range, which is kind of interesting. So maybe opportunity lurks there, but nonetheless, everything is mediocre right now. And no real news that we care about till the end of the week. Isn't that amazing? There's a lot of things on the calendar, but a lot of things we don't care about. Most things we don't care about. 99% of the news is not worth our time in the sense of offering trading opportunities. And again, the cool thing about this is it offers multiple types of trading. Short-term trading. These are all short-term charts. It's not grabbing it. Short-term charts all the way out to even swing trades, right? Like pound dollar, if we look at the same news. Look at these things these are hourly candles lasting days. Cool. So when we look at the news radar and there's nothing till Thursday, then the news plays a role, but it plays the role of grease under your skids. Keeps the market moving. It keeps volume and moving along. Keeps the markets from freezing up, but just maybe not directly tradable. Cool. Let's go back to Quanti. Okay. Bitcoin flat, dollar flat, S&P 500 flat, gold up a little bit, oil up quite a bit. See, quite a bit. And 10-year pretty flat. So nothing's happened yet, but I suspect we're going to have a good day. I might be wrong, but it's the lens I'm filtering everything with. So if things do turn out to be good today, I'll be ready, willing, and able. What else is on the calendar besides that durable goods? GDP. Okay. Um, See, consumer confidence, whatever. Yeah, okay, Aussie CPI, that might be interesting. We just know that it's not a big market mover, but that's going to be good for our analysis. Today, we're going to meet at 4 o'clock. Is that right? Download some reports and do some ready. Yeah. I'm going to see if I can tighten that up. Our meetings are usually, 90 minutes long? I'd like to tighten that up and get it to an hour. I'll see what I can do. Yeah. Uh, because here's the thing, there we are going to add more and more and more live events. Like I'm telling you, you're going to have to be picky choosy because there's going to be so much going on at traders.com that you're going to have to be picky and choosy and register for your events and get your reminders, because you're just going to have opportunity after opportunity after opportunity to see different ways that people are using traders. Cool. And under different topics with, all that kind of stuff. So, um, cool. So I got to tighten my stuff up. You'll be fatigued after 3 hours of Wayne talking about fundamentals. You'll be glazed over, right? Like an overcooked salmon. You're like, ugh. All right. Well, we don't need to really go into any of this stuff today. Let's take a look at some scorecards. Let's see just like what is moving. Like, look at this. It's crazy, isn't it? Everything is toy. Look at, there's two things that are slightly bullish. Well, sevens are pretty good. And then neutral, everything else neutral. Whoa. All right, well, things haven't kicked in yet. It's just telling you to be cautious. And then just a handful of things to be bearish on. Yeah. Aussie, it just doesn't like Aussie, huh? Doesn't like Euro. Doesn't like Aussie, doesn't like Euro. Central bank obviously could come in and change the directions. It doesn't change quantitative analysis of economic data. But the central bank, let's say, could come in and announce, let's say the ECB says, yeah, everything here sucks economically. Oh, but we're going to hand out free money. If they did something like that, obviously the economy would expand, even though the current economic situation is bad. But the trick with what we do is sometimes you have to understand, if the economic situation is so bad, then the government or the central bank will have to do something. And the doing something is what we have to trade and invest. But 99% of the time, we're trading the economics. But the whole reason we track things like institutional positioning, retail positioning, seasonality, trend, GDP, inflation, labor, the PMIs and all these things. The reason we're tracking all these things is to try to understand what the central bank might do next. And so if the central bank just does something, well, that's the thing, right? Now you don't have to look because they just did something. But like Kiwi dollar, really? I'm like, really? Kiwi dollar is the best thing we got right now? Well, it would benefit from such risk on news out of China. Hello. Didn't finish loading. Boom, 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 boom. Oh, did I kill the whole thing? Oh, Wayne, come on. All right. So we go to Kiwi dollar. Uh, 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 mhm. So institutions are long, it seems. Is it? No, no. I think there might be a glitch in this matrix. This is why you double check everything. No, I think that's wrong. Uh, 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 uh. What else? Seasonality, maybe. It's hard to tell in this chart. Down. September, August to September, down. September to October, up. Yeah, okay, that's probably right. Technical trend is right. Looking at inflation. Okay, one is good, one is bad. So that offsets. That's right. New Zealand, huh? Unemployment 4.6, in the United States 4.4, 4.2. Interesting. This is coming down and this is going up, but they're roughly the same. But okay, this coming down, they're saying that's good. And that going up and that is bad. Yeah. So yeah. Okay. So this part is wrong though. It's not a 7. Unless, oh, you know what they've sometimes they maybe they don't realize what they're doing and they forget to tell me. But they're trading they're plotting not just COT but the weekly change. Maybe that's what they're doing here. Less dollars, more. Anyways, I'd have to double check. But the most important thing is they're doing that everywhere. But you see, this is what they're trading. So more money went to Kiwi. That's a 1, and less money went into, or money came out of dollar. So that's also a 1. So that's how they get to the 2. Okay. Silly billies. I'm okay with that. Are you guys okay with that? It's week over week seasonality, change in seasonality versus absolute. But see, I'm not entirely sure when these developers, I'm like, do this. So they go do it. And they don't really, from an economic point of view, they don't realize what they're doing. This is why you always have to think, catch this. So I didn't catch that before. But this too is based not on the absolute. The market is short Kiwi. The market is long dollar. But we have the opposite, but that's because what's changing. And I think I like that. What's changing is the Kiwi dollar is becoming more bullish. What's changing is the US dollar is becoming more bearish. And that's why there's a 2. One for the Kiwi going up and one for the dollar going down. So I'm actually okay with that. Yeah. I don't like finding it. I'd rather people tell me it. But that's interesting. Okay, cool, cool. I'm okay. Yeah. Good. Good, 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 good. Okay. So this is a good exercise nonetheless. Going through looking at how the score became the score is important versus you just believing it was ordained by God. That is the Kiwi dollar score. You're like, no, 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 no. You know what? This is man made. This is a man made mess. So you should figure it out. And I think the process of you figuring out makes you an economist. You're like, okay, well, okay, manufacturing PMI. How did we get to that? What is going on in New Zealand that makes it so good relative to the United States? Yeah. No overnight change, so that's good. Mhm. Okay. Okay, it's good. I like the trend. I like the upcoming seasonality. So if you remember how this works, okay, there's the month before September and the month after September. And somewhere in this window. So would we include the entire month of August? No. Would you include the entire month of October? No. So now we can say the second half of August, or even be as bold as to say the third week of August. Somewhere between the third week of August and let's say the third week of October, Kiwi dollar goes from bearish to bullish and continues till the end of the year. Well, that's, of course, what I've been teaching for decades. But now we can see that somewhere, and we're in prime time, right in the middle of that window, right? Third week of September. We're right in the window of opportunity where you would expect to look for Kiwi dollar to be strong. And you see, okay, you see it bullish here, and it's catching a bullish signal quantitatively. This is statistically, and only, I think the maximum you can have for trend is 2. Seasonality is like, well, September is typically down for Kiwi dollar. How do we read that? Does that mean we should be shorting today? No, it means if it's down now, if it's fallen for a while, then the opportunity exists for buying somewhere, let's say later in September, and holding for a couple of months. Buy it after it's dipped. This is just saying that in the month of itself, the month of September itself often has a dip. Cool, but if you're a bull anyways, because of seasonality, you're looking for the dip and you're looking to buy the dip. That's how you want to read it. It's down now, but it's going to be up next month. It's going to be up in November. It's going to go up in December. So you like this, is what I'm trying to say. You want that. That's part of your predictions. Go a little further out. Okay. So again, let's frame everything. Somewhere in the middle to late September, you're expecting Kiwi dollar to go up. It might be early in September. It might be late in September, right? It could be a little somewhere in a little bit of August, but definitely by October. And in the middle is our SEP, right? So if this is a period of 6 weeks, then somewhere around week 3, right? Right? If this is 6, if that to that is 6, then maybe somewhere in the middle, right? Anyways. So the last 2 weeks here, 4 weeks there. I know actually when you add them up, it's probably closer to 7. But anyways, check this out. This year, we went above on the between the 16th and the 17th. Huh. Well, that's interesting, right? Yeah. It's a coincidence, yes. Now that I'm doing it, it's hindsight. Yeah, but you're supposed to be doing some hindsight. We call that research. So it's been up for a few days. Do you think it's over? It's too late. You've missed it. Ah, crap. You missed it. What does seasonality tell us? Seasonality tells us it could be up for, let's say, 12 weeks. Okay. Let's just round it off and say seasonality tells us this can go up. Generally speaking, like obviously not every day, but generally speaking, on a normal year, and yes, we have a central bank thing, and yes, we have an election. Great. But the bottom line, over long periods of time, you could expect, generally speaking, Kiwi dollar could go up for another 100 days. And it's been 1, 2, 3, 4, 5, 6 days. So you still have 94 days. Did you miss it? Or could this maybe perhaps frame your strategy? You wake up in the morning, right? What do you want to do? You're like, I wonder if I'm going to buy some Kiwi dollar today. Right? I'm telling you, when you do stuff like this and you go to your charts with intent versus like looking for something to do today, the outcome of what you see is quite different. Because when you shop while you're hungry, you'll buy almost anything. Everything will look good. Right? All of a sudden, you find yourself, it's 8:45 in the evening and you're at 7-Eleven buying dinner for the night. Why? Because you didn't plan the week. You didn't, or you could just have, like, we have like Walmart and Kroger's just deliver our food. We don't even go to the grocery store anymore. But you have to plan in advance. What are you going to eat tomorrow for dinner? I don't know. I'm just going to, like, when I get hungry, go to 7-Eleven. Right? I learned how to cook dinner in prison, right? Apparently, you're supposed to take, like, you can get microwave Kraft macaroni and cheese and you mix it with something else and you microwave that with, I think it's Cheetos. And then you get the hot mama pickle that they have the vending machines in the prison. And dude, that's a good night. Apparently that's true. I tell you, wherever I go, I talk to people, right? And I learned this stuff at a gas station. I'm like, wait, what? You have Cheetos, microwave macaroni and cheese, and a hot mama pickle? Learned it in prison. Like, right on, bro. So, anyways, yeah, planning ahead changes everything, doesn't it? It might even determine, if you plan your groceries, your meals 3 or 4 or 5 or 6 days in advance, you probably save money and live longer. I could probably prove that. Yeah. So, anyways, well, how does that impact you as a trader? You probably make more money and live longer, or at least your account does, right? So anyways, have you missed this? And you're like, seasonally? No, probably not. You want to double check this over here as well. Okay. And September typically provides a bottom out scenario for Kiwi dollar. Well, it looks like it dropped for a while, huh? Quite dramatic for normal years, but remember, the Fed's going to cut, the Fed's not going to cut. Yeah, the Fed's going to cut. No, they're not going to cut. And now they did cut. So what's the next leg of this crazy year in gray? This. Remember, the Fed's going to cut. No, they're not going to cut. They're going to cut. No, they're not going to cut. Oh, they cut. So now we get our dollar weakness, right? Okay, great. So this is what you should be trading now. This is what you should be framing your reality. I was talking about that yesterday, where we don't know what it is, and we have to choose between this year is different or this year is the same. Well, if you do start to get some up here and it's normal, start with that. And if it collapses on you later, don't worry. You know how to place your stops. You'll be fine. But you need to try. And you should also know that if you're going to take that risk, the reward is not buying here. The reward is somewhere in the process. Oops. Sorry. Of buy here and 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 buy here, buy here. And if possible, it's not always possible, okay, you're holding on to all of these. Okay. Because you know it's not a 1-day move, it's not a 1-week move. It's not a couple of weeks, it's not a month. It could be the entire fourth quarter of the year. Yeah. That's what the value, I think, of TRADARS is using our fundamental analytics tool is not just knowing, what trades to get. So like under scalping, it says, look at this, not that. Over the next 4 hours, this is a great opportunity. Yeah, well, how about the next 4 months? So if you can get both of those in line, right? In fact, well, the economics of Kiwi dollars is 7. The fundamental, the seasonal, right, is 100 days of up. So now if you can find the right time to be looking at Kiwi dollar, you would find that if you have access to the scalping tools, maybe some of this move happens around Kiwi news, right? Well, we would find that again under some scalping tools. Or you can say, I am interested. I do like buying Kiwi dollar if it's trending, or if it's trending down, you want to buy some up, right? So Kiwi yen here, okay, we want Kiwi dollar. So we can do like, let's turn everything off, and maybe you can do this. I like to do stuff like this because um, I can't. My personality is I can't do 2 things at once. You do not want to talk to me while I'm driving, right? Because it always happens. As soon as we get in the car, my wife and kids want to talk. I'm like, oh my God, why are we talking? Why can't we just listen to music or something? And then sure enough, they're like, you were supposed to turn left. I'm like, you could have said that about 30 seconds ago. Why would you wait and tell me after? Right. But, anyways, now I got to do a U-turn somewhere. Right. So I can't do 2 things at once. But I can do one thing very, very, very good. Yeah. And then I need to literally sometimes change rooms to go do something else. Right. So, anyways, I'd like to focus. So I'm like, give me Kiwi yen, give me Kiwi dollar, maybe some Kiwi Swissy. Why? Swissy, yen, and dollar are funding pairs. If I'm thinking about being long Kiwi dollar, I'm probably thinking about being long Kiwi yen, vice versa. So, anyways, so I like to isolate this. So if I've just done seasonality and I've done a scorecard and I've done everything on Kiwi, I want to know what's up. Long term, TRADARS has told us we have started an upward move in Kiwi dollar, but we already would have expected this seasonally, but now we confirm it using a rising wedge technical analysis. It's not an opinion. We're not asking the computer, give us your opinion. And really, when you're asking the fundamentals, yeah, I actually am the computer, right? I designed how we get to our decision of should Kiwi dollar go up or down. And I can argue based on economic fundamentals. This is just pattern recognition, and there is no little wizard like me behind the scenes pulling the strings and pumping out like, hey, draw that rising wedge. No, we've taught it what a rising wedge is, and that's it. Now go find them. So it is factual. There is an uptrend on this time frame on Kiwi dollar, and it came out 4 days ago. Neat. So we should have been or could have been somewhere in here, huh? And there's still a long ways to run because we know there's a lot of potential upside. Let's say implied upside, not based on volatility, but implied seasonality, implied direction based on what normally happens. Cool, that could be an opportunity. Kiwi yen needs a little break, and then we buy the dip. This is a 15-minute 30, so it's basically the same thing. So later today, we might want to look around this price. Okay, I'm going to, there we go. I'm going to connect this with this, drag it across. Okay. Somewhere in the low 90s, 90, 20, 90,000, maybe. Okay. Same thing. This is the same pattern. Okay. Somewhere in there. This looks like maybe a little lower, maybe a retest of 90. Maybe it's going to be a psych level. But now you can say, here's your strategic plan for this morning. Buy a dip on Kiwi yen. Yeah, Jim's like, yeah, and there's a 21 there. And yeah, there's going to be all kinds of things, right? They're all one of the things I really like about technical analysis, and it took me a long time to actually come to this conclusion. They're all sort of different measures telling you the same thing, right? So, like, and that's a great example where Jim's like, I'm going to kick it off the 21. And I'm like, I don't believe, I don't believe in moving averages. I will buy this dip, off the bottom of this pattern. Okay, great. And another one comes along. I don't believe in moving averages or patterns, but I love price action, right? And someone else just, trades that. Yeah, well, it's still going to work. My point here is you don't need lots of complexity. You don't need all those things, right? But you can have, if you have a good decision-making process. So you're like, I have a strategy for this morning. I want to buy a dip around 90 for Kiwi yen. After that, your tactics, they could be mediocre. If you get the strategy right, you'll probably be okay. Because what's the strategy if we're in an uptrend that just made a higher high? Hey, bro, buy a higher low. How do you make the determination of when to buy the higher low? I suppose it barely even matters. You use an oscillator. Jim uses a moving average. I use a pattern. Someone else uses price action. Ultimately, it's all the same thing. Yeah. Yeah, it's all the same thing. But you need to get this part correct. Right? So we have some pretty cool tools. Okay. And this is a neat opportunity. So we finally get to this pattern, but after analyzing, fundamentals of the economies in the United States and New Zealand, we looked at the scorecard and broke things down and looked at institutional positioning and retail positioning and changes of economic directions and all kinds of things. And we're like, yeah, up for 100 days. Oh, look, a buying opportunity, right? We're just like, yeah, now it all makes sense. It's all in context. So it could be up for a few days. And then what? Let's plan the future. Is it going to be up for a few days and then drop to 55? It could, but it's not likely. I don't think that would be a healthy way to look at the market or a healthy thing to be concerned about. But what I would do is I would look for a role reversal, huh? And you probably want to extend these yellow lines further. And then and say, oh yeah. Okay. So up for the rest of the week, down a little bit, and up next week. Healthy process, isn't it? Yeah, healthy process. I want you to be process driven. Uh, we have so many tools now. I don't think, I have one more secret weapon to give you, and you may or may not use it. But after that, I'm gonna be hard pressed to come up with more ideas to give you stuff, and maybe I'll run out of money. But I think we're kind of like done. We don't need to develop anything else. We have far more data than we need to make logical, intelligent decisions. And so now the next is process, 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 people, 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 people. It's us making our decisions. We have way more than enough to make decisions. So now it's the decisions we make. And I love that. Because imagine me for 20 years kind of explaining things the best I can and then just kind of leave it at like yens go up at the end of the year and you should just trust me somewhere, right? Um, Now it's like, look, I can show you, and I can then say, oh, and by the way, I've traded that trade for 20 years. It's going to shape and influence the way I think about the market. But at least I can say, see, here it is. So now we have these decisions with performance coaching and community. We can really bring this in tight. So our process and literally the decision making process is what I'm talking about, not the routine, the decision making process. Yeah, cool. And I want to celebrate the differences. So like every day I show you my routine. But like I said, I'm going to bring in more and more and more live events. Like maybe every single day, there's one more event, but it won't be the same. Let's say, routine on a different process. I want to highlight the way that different people use TRADARS in their decision making process, right? I want us to learn from each other. I think that's very, very, very important to leverage us. Cool. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you later today, 9:15 over at Forex.today. And then and I think CIA people we're going to meet tomorrow, right? I'm going to have to send out an email today. It should be pretty quick. I know we're going to talk about two different funds, or is it just one? Kind of the same. It's two, same crew. Actually, it's a different crew, isn't it? But same firm. So we'll look at two different funds, and then I don't know. We'll make a decision. And the cool thing is, CIA, the decisions that we make on this pension fund will influence what happens at the endowment funds. But I also put some cash in another personal investing account over there, and you're going to heavily influence where that goes. But my problem with that one is because it's not a pension fund, it's taxable. And then I'm like, do I want our strategies into a taxable account? And I'm like, I don't know, but it might shape my decision making over there. So I love, this is what I'm saying. I love our conversations at the CIA. It's so crazy. Yeah. So peace on earth. May the pips be with you. May your profit.